Hey, what's going on, crypto people? It is your boy, the Crypto Siege, with another day in the life, in the crazy life that is the digital asset space. What's going on, guys? Happy Monday to you, the 1st of March. Interesting article here that I wanted to share with you guys. Looking forward to a really exciting day of getting some videos out and sharing some content with you guys. Actually, for today and the whole week, as a matter of fact, because it is about to get really real. Really real in the digital asset space. All right, guys, so listen, this is your XRP Ripple Daily News in 0 to 10 minutes. Let's do this. So this is an article from QZ.com. Central banks are contemplating a world without cash, dated March 1st. So from our recession for the future of finance, cash may not always be king. That's why apps are, as apps and payment cards become more popular, officials at central banks are considering how and whether to create a digital form of cash. The way we pay for things is changing quickly. The Visa and MasterCard payment card duopoly is steadily increasing its reach in many parts of the world. At the same time, tech companies like Apple, China's Ant Financial, Sweden's Swish, and Kenya's M-Pesa are rapidly changing the game for mobile phone payments. Facebook has some of the most ambitious plans, but it will hit a wall of resistance from government authorities. As money gets swept up by tech innovation, government authorities are taking a closer look at old-fashioned notes and coins. More than a dozen countries are either researching, piloting, or, like China, have ongoing work in place for central bank digital currencies, according to a Bank for International Settlements report published today. Yeah, a lot of stuff going on coming in from the BIS as of late. Central banks around the world are investigating a rich set of prototypes, the BIS wrote. If these results are shared, it could help determine which technologies and designs are most optimal for a central bank digital currency, and whether and how they should be rolled out to the public. This debate matters to officials because there's a critical difference between the notes in your purse or wallet and your digital wallet or checking account. The former is issued directly by the central bank, the lender of last resort, and typically the anchor for a country's financial system. The latter depends on the stability of commercial institutions and can be more vulnerable. In the event of a financial crisis, consumers can and do take comfort in knowing they can convert their electronic money to cash if needed, according to the BIS. This flight to cash has been seen in many crisis episodes, including recent ones, the BIS wrote. If in the future cash were no longer generally accepted, a severe financial crisis might create further havoc by disrupting day-to-day business and retail transactions. While physical cash isn't yet endangered in most places, the experience of a few countries, notably Sweden, China, and even to some extent the UK, shows that a world with much less cash usage is increasingly possible. That's why the BIS, sometimes called the central bank for central banks, published a report sketching out possible designs for a peer-to-peer central bank digital currency. Isn't that interesting? Now, originally the CBDCs were going to be amongst the central banks themselves, but now they're talking about one that's going to be peer-to-peer as well. So that's a very interesting thing. So here's another article that I found to be very interesting as well about the central bank. And it looks like they are moving, or the BIS and central banks are moving forward really quickly. So here it says, the central banks urge G-20, we all know this is G-20 just ended not too long ago, to back cheaper payments roadmap. So the central banks urged the G-20 to back cheaper payments roadmap. And this is from businesstimes.com, dated Monday, March the 2nd. Central banks urge G-20 to back cheaper payments roadmap. Central banks will ask world leaders to back a roadmap for cutting the costs of cross-border payments. The Bank for International Settlements, the BIS, said on Sunday. Isn't it interesting? The BIS is not messing around. I wonder if that has something to do a little bit when Madame Lagarde walked Brad Garlinghouse into the doors and had a little bit of a chat, right, with the head of the BIS, Augustin, right? Karsten, I believe is his name. So the BIS wants the group of the 2020 leaders to get behind the plan, which is being drawn up to regulators, I guess, central banks and treasury officials from across the world, and will lay out steps to improve a payment system hindered by high costs. Political will is needed to create conditions for cheaper cross-border payments that are properly regulated at a time when international correspondent banks are pulling out from aiding such payments for local local lenders. Cross-border payments, critical for some emerging technologies or emerging economies that depend on remittances sent by migrants abroad, are hampered by low speeds, high costs, and cumbersome processes. The roadmap will look at current costs, sticking points, and risks in payments and pinpoint how the private and public sectors can tackle them. The Basel-based Bank of International Settlement, an umbrella group for central banks, said. I find it very, very interesting, guys, that the BIS is coming out. They're moving forward. They're kind of taking the lead on what they know is going to inevitably take place. And I find it to be very, very fascinating. Digital assets all are wrapped around this. Distributed ledger technology is wrapped all around this, guys. In a rare move, the BIS devoted its quarterly review to payments in a sign of how Facebook's plan to launch its own Libra cryptocurrency has forced central banks to look beyond their wholesale payments network to changes in the retail sector. Facebook's planned expansion to retail payments has focused regulatory concern over the role of big tech in financial services, stoking debate over who will control money in the future. You remember when Brad Garlinghouse did that, when after Facebook did that Libra announcement thing, that they had significantly amped up their partnerships, record pace because of that. So, right, as technological changes sweep through the domestic and cross-border payment sectors, central banks must accelerate work to guarantee that new services run safely and efficiently, the BIS said. Central banks have a core role in payment systems, said BIS General Manager Augustin Carstens. The changes underway require them to step up and play a more significant part in improving the safety and efficiency of these systems. Yeah, that's why they're doing it. Peer-to-peer systems that could cut out middlemen are the most transformative way of improving payment. Right? So that's code for if you can't beat them, join them, right? And we said on the channel plenty of times, once the powers that be discovered that they could not, strong arm this technology, once they figured it out, they knew they had to join it, right? They had to adopt it and embrace it, right? Because they couldn't strong arm the technology. So, peer-to-peer systems that cut out the middlemen are the most transformative way of improving payments, the BIS said. These often use blockchain-based systems. Proponents say blockchain could wipe out the need for middlemen such as banks in payments, but trusted intermediaries like central banks are still crucial. said the head of the central bank of central banks. Money and payment systems are founded on trust in the currency, whether cash or digital. And this trust is something that only the central banks can ensure, it wrote. Still, whether central banks can exercise control over decentralized payment methods like Bitcoin, which transcend borders and have proved tricky to regulate, is unclear. Central bank digital currencies, digital money issued and governed by a central bank, could provide a safe and easy means of peer-to-peer payments. Isn't that interesting? Isn't that interesting? Yes, that was my alarm there, guys. Central bank digital currencies, digital money issued and governed by a central bank, could provide a safe and easy means of peer-to-peer payments, the BIS wrote, right? So they're hanging on for dear life because they realized that they could not strong arm this technology. So they had to figure out a way to adopt it and try to be inclusive, right? Because the technology will innovate around them. And so, guys, very, very interesting article. I wanted to share that with you guys. I want you guys every single day to never, ever forget this. You guys, we are blessed to be early adopters in this digital asset space, right? We're blessed to be early adopters in this new asset class that is the digital asset space, guys. And guys, you and I, we're playing a game that 99.9% of the masses don't even know is being played. And we're winning. All right, guys, listen, I'm going to wrap up this video like I do all my videos and remind you of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, but we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating? Or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.